got some good news yesterday. So we'll start right off with that. You won the bet. The Fed cut a half a point.
But you know what? It doesn't mean shit for mortgage rates. Like, it really doesn't. Not yet. Like, man, I need to watch my potty mouth. Like, it's not good here. Starting off bad, Brendan.
It's okay. Because the market really didn't do shit yesterday. Until late in the afternoon, it just kind of like, yeah, okay, we knew it. So what?
It's always interesting because it's like, the Fed rate, right? Like when we hear Fed rates and the drop and this, that, everybody assumes, okay, it's going to drop all rates across everything. Like everything's going to be impacted. But the Fed fund rate, which is your overnight rate of trade, right?
Short
like
term.
That's what the Feds allow banks. That's short term. So that means your things like credit cards are going to be affected. Your short term installment loans are going to be affected. You're going to have like all these little things will get affected, or short term loans or revolving debt. They're all going to see an improvement in the immediate. Mm-hmm. What's not directly impacted are your long term debts, your long term loans like mortgages.
10-year T got worse. It
got
didn't
worse.
actually get better. It got worse.
So,
rates are up.
And that was actually, what was that?
Rates are up a little bit.
Rates are up. They're technically higher today than they were yesterday. They were higher yesterday than they were the day before. Like, in fact, Monday, we saw some improvement, but Tuesday, Wednesday, we saw worsening. Yeah. And I expected that because usually what happens in big news cycles like this, when you have big things like Fed fund rate and stuff, it's kind of like hey, here's the news, we got the news, and we're waiting, and then once the actual event happens, like everybody kind of says on mortgages, they kind of pull back and go, okay, let's see what's going to happen in the markets before we start adjusting.
Yeah. I mean, here, if you look at the 10-year T over the past couple of days, basically since Monday, we have had a slow and steady increase upwards. But the Fed was cutting rates. The housing market's supposed to boom again. Everything's supposed to be wonderful.
Yeah.
But I don't think what a lot of people realize is, why does the Fed cut rates? What does that usually mean? It means the economy's not doing so well.
It's not doing as well as they thought.
Yeah,
they need to, right?
And you've got to loosen liquidity.
Yep.
The rates are lower, so liquidity should be easier to get, which should spur the economy. Correct? That's generally how you see it. And I don't know if you've been following Jamie Dimon at all, but he keeps warning that we're in for a recession, even with the rate cut.
Well, and this was interesting with the rate cut, right? Like, I thought it was interesting because this was the first time. I think I could be totally wrong, but I'm 99% positive I'm getting this statistic right. This is the first time ever that the Fed members weren't unanimous in what they wanted. Like, we had 11 of the 12 members voted for a 50 bip, but Michelle Bowman voted for a 25. And so that was just not a member, that was a governor member, right? So a little bit, I was kind of shocked, but I think I'm 90% positive that this was the first time that's ever happened that it wasn't a unanimous decision on the amount of cut or increase. So kind of interesting. You had one person that kind of pulled back a little bit and said, well, maybe I don't, but this is where my mind was kind of going into this. And this, I think realistically probably should have done zero in my mind, right?
When you look at the numbers that came out earlier in the week and last week, the Atlanta Fed changed the GDP to 3%. That's solid growth.
Yeah.
Very solid growth. And then, we look at things like today, like the jobless claims, and
jobless claims revised down.
Revised down, and they're actually very strong. It was only 219,000. It was a decrease of 12,000. Yep. So, and then our long term has really kind of settled down, leveled off as well. So, those steady numbers seems to be, if things are working well, why do I need to cut the rates?
Well, you know what it kind of tells me? It tells me that all these reports are probably bullshit. Because they wouldn't be cutting if everything else was perfect. Now, there's the other side, which is the side I kind of leaned on, is we're going into the last quarter. Did Jerome Powell, did a lot of these members, did they want their legacy to be, we got inflation under control, but we drove America into a recession? Mm-hmm. Are they kicking the can?
They're still trying for that soft landing.
Are they kicking the can down the road to make it somebody else's problem? Mm-hmm. Because they know that maybe their time is almost up.
That's I can see that, and I don't care what anyone says. Jerome Powell is concerned about his legacy. He really is.
Oh, 100.
But what I'm looking at, I think my first comment to you yesterday when we were talking about where we think was going to go was, inflation is going to spike because we're going to get this liquidity back into the market. And if this liquidity gets back into the market, what's going to happen? It's going to force prices back up. So I know when you look at things debt-wise, Americans are tapped out.